All right, let's talk about a problem that's actually a pretty good problem to have. Your business is taking off, but now you've got this new challenge. How do you keep your financing from holding you back? Well, today we are going to break down the blueprint for mastering business credit. We're talking about turning it from a potential roadblock into, honestly, your most powerful tool for growth. Okay, so here's our game plan. We're going to start with that growth dilemma I just mentioned. Then we'll get into the nitty-gritty, laying the foundation, understanding your financial resume, and even learning the secret language lenders use. After that, we'll talk about getting your passport to credibility. And finally, we'll put it all together to see how you can unlock that next level. It's going to be a good one. All right, first up, the growth dilemma. You know, this is that classic catch-22. Your business is absolutely crushing it, but that success, well, it creates a whole new set of problems. So let me ask you, and be honest, is your business growing faster than your financing can keep up? Have you ever had to say no to a huge opportunity just because the cash wasn't there at that exact moment? Yeah, it's a super common growing pain, but it's a painful one for sure. And this really hits the nail on the head. You can't let your success outpace your financing, because we're not just talking about covering payroll or buying supplies here. We're talking about having that financial firepower, that war chest to go after the big, game-changing deals. And that right there is where a solid business credit profile can completely change the game for you. Okay, so how do we build that financial muscle? It's actually not as complicated as you might think. It all starts with the basics. Let's walk through the first, most crucial steps to building your financial strength. So these 5 steps, think of them as the absolute bedrock of your business credit. First, and this is non-negotiable, open a dedicated business bank account. You've got to separate your personal and business life. Second, use that account responsibly. No overdrafts, keep a healthy balance. It shows stability. Third, grab a low-limit business credit card. It's like a starter for your credit profile. Fourth, and this is key, pay that card on time every single time. Pay it in full if you can. And finally, number 5, as your business gets bigger, you can start to expand that credit portfolio. Maybe a line of credit, maybe a small loan. See? Each step is like a little brick you're laying, proving you're a reliable business. Okay, so all that good work you're doing, paying bills on time, managing your accounts, it doesn't just disappear into thin air. It gets recorded. And the best way to think about it is this. Your business credit report is basically your company's financial resume. It's the story that tells lenders and partners exactly who you are, financially speaking. And you have to remember, this isn't some dusty file in your own office. This is what lenders see. When you apply for a loan or a supplier considers giving you terms, this is the document they pull. It's their first and sometimes only look into the health of your business. It's how they decide, are you a good bet or are you a risk? So take a look at this. This is a sample summary from a report. Right away, you can see how much info is packed in there. Lenders can just glance at this and get a pretty good snapshot of your financial health without even digging into the details. These key scores tell a big part of the story fast. Let's zoom in a bit. You see things like the commercial delinquency score. That's just a fancy way of predicting how likely you are to pay your bills late. Then there's the business failure risk score, which is, well, it's pretty self-explanatory. It predicts the odds of your business running into serious trouble in the next year. For both of these, it's simple. The higher the score, the better. A high score tells a lender you're a low risk, and that's exactly what they're looking for. So what's actually in this financial resume? Well, it's the whole shebang. You've got your risk scores, of course, but also all your business ID details, your full payment history, any legal issues or collections, bank reports, even property you've used as collateral. It's a complete 360-degree view of your business's financial life. Okay, so now you know what's in the report. But how do lenders actually read it? It's like they have their own secret language, and we're about to crack the code on one of the most important terms they use. It's called the Debt Service Coverage Ratio, or DSCR for short. I know it sounds super complicated, but I promise the idea behind it is incredibly simple. It's all designed to answer one single question for a lender. Does this company make enough money to actually pay its bills? And the formula for it? It's really straightforward. You just take your net operating income, that's basically your revenue minus your day-to-day operating costs, and you divide it by your total debt service, which is all your loan payments for the year. That's it. So what's the magic number you're shooting for? Generally, you want to see a DSCR of 1.5 or higher. Think about it. A score of 1 means you make exactly enough money to pay your debts and not a penny more.
That's cutting it a little close, right? But 1.5, that tells a lender you can cover your debts and have 50% extra cash flow left over. Now that is a healthy cushion. That's what makes you look like a safe bet.
All right, moving on from all the numbers and ratios, there's another piece of this puzzle that's absolutely crucial, especially if you have big ambitions. Think of this next thing as your business's official global passport.
This is the DUNS number. It's a unique 9-digit number from Dun & Bradstreet, and it has one simple but powerful job: to verify that your business is a real, legitimate entity. It's like a universal serial number for your company, recognized all over the world.
So why should you care about some 9-digit number? Well, you'd be surprised. You want to put an app in the Apple Developer Program? You need a DUNS number. Want to become a big-time seller on Amazon Vendor Central? Yep, you need one. Applying for U.S. government contracts? It's mandatory. Bottom line, it's your ticket to playing on a bigger stage, building international credit, and just flat out looking more credible to banks and suppliers.
Okay, let's pull all these threads together. Remember where we started with that problem of your success creating a new financial bottleneck? Well, we've now laid the foundation, we've decoded the reports, we've even learned the secret language. This is how you finally unlock that next level for your business.
And look, the difference here is truly night and day. Without business credit, you're stuck using your personal finances, which makes lenders nervous. You're seen as a higher risk, and that means limited funding and slower growth. But with a strong business credit profile, you create a firewall between your personal and business risk. You're seen as a credible, stable company, and that unlocks bigger loans, better terms, and the fuel you need to really grow. It's a total game changer.
So there you have it. That's the blueprint. We've gone from opening your very first bank account all the way to getting your global DUNS number. You now have the inside track on what lenders are looking for and how to give it to them. The plan is right here in front of you. So the real question is your business ready to build its next level?